Mhm.
All right. Hello, everyone. Thank you all for coming out. Happy Friday. Happy Good Friday for all you Easter lovers. And looks like we're in another classroom. Yeah, I got to tell you, these classrooms are beautiful. I hope y'all appreciate them. This is really, really great. Um, Today, we're going to be talking about, handling your debt. But before I wanted to get started, I wanted to talk about a couple of things that's been going on in the news lately. A lot of that might be a bit concerning to some of you. Anybody hear about Liberation Day? Exactly. Yeah, it's an unfortunate thing. So Liberation Day is the day where we were supposedly having the tariffs implemented, and a lot of these tariffs have been affecting a lot of people's spending habits, particularly the people that look like you and I, Americans. And with some of those challenges, a lot of people, whether you're just starting college, just starting out with your new career, or you're preparing to retire, it does affect the way that you're spending your money. So it'll be a good idea if you can, take a look at some of the things that are going on in the news right now. That's talking about how the economy is going and some of the things that are being taken away. I've actually been chasing my congresswoman around all week, and during this time of me chasing my congresswoman around, I've had a chance to listen to some stories from people from all political parties, Republicans, Independent, Democrats, and it's pretty much the same story for everyone. A lot of people are having some challenges financially, particularly because of some of the policies that are being put out there. This is not a political class. I'm not here to talk to you about anything political, but I do want you to be aware of some of the stuff that's going on out there and how it will impact you and your education, particularly any student loans you might be getting, any additional monies, and even your VA benefits if you're getting VA benefits, right? A lot of things are changing. If you're a little bit older, a lot of people that will be looking at this presentation are a little bit older. Their Social Security might be affected. Their Medicare will be affected. One of the things that they were talking about is in order for you to get $880 billion in cuts, certain things, and particularly entitlement programs like Medicare and Social Security, they will have to be cut. And that's going to affect a lot of people. So I just want you all to be aware of that. There's a couple of other things that I wanted to talk about today as well. Uh, I had this nice little gadget that was in here, but I guess I'm gonna have to use this one right here. Let me see. I hate to sit down, but I can't reach it. I can't reach it. But how about we do this? So again, this is module two. Thank you all for who's ever been, who was here last month. Who was here last month, by the way? I got one, I got two, well, almost half the class. So if you're here for the first time, there's four modules to this presentation. The first module, we talked about budgeting and being able to identify your discretionary income. Positive discretionary income means you have some leeway, some movement in your finances. And negative discretionary income means that we're going to have to make some cuts somewhere to make sure that you can be solvent every month. Because you don't want to run out of money before you run out of month, right? Because it's always that last 2 or 3 days when you get nervous trying to figure out where you're going to get the extra income from. But today we're going to be talking about credit. And I want to also talk about some of the scams that are out there right now because a lot of scams are going on. This is actually by request. So just so you know that if you have a request, I will find a way to get that added to the presentation if it's not already in there. So Ms. Ross wanted to talk about scams, and a few other people at another location wanted to talk about scams. So we're going to cover a few of those topics today, but we're going to be titled "Handle Your Debt." I'm sorry. So let's go ahead and get started. And I don't have that clicker thing, or at least I don't see it. So bear with me here. Lisa won't go to sleep on me, right? So understanding your credit. My name is Tony Warfield. I'm actually a United States Air Force veteran. So just in case y'all looking at me like, who's this guy? Yes, I'm a veteran. Looks like I'm pretty much older than everyone in here. Who's the oldest person in here? Don't answer that. Don't answer that. So I served from 1989 to 1997. I was a flight engineer. Had a good time. 47 countries, traveled everywhere, enjoyed everything, ate everything. And during the whole time I was in the military, all the places I went to, I never learned anything about money. You're living in a dorm room, right? They're giving you your clothes. You get to go to the chow hall. Back then, the chow hall, a whole breakfast cost me $2.30. I don't know what it costs right now, but I bet it's a bit more. How much does it cost now? Does anyone know? $10, $15? No? Is it still pretty inexpensive as compared to everything else out there, or how's it looking?
Not
Any
the
better?
same.
Yeah, you have a card, and you just scan the card and go in.
Oh, really?
Yeah, you get a child home card,
You get a what?
like a little card.
I don't know
That's
anything
what
about
we
that, bro. Well, I'm pretty sure that, there's a lot of technology changes that have made everything a little bit easier for everybody. So, I go back to the time when we had just cash, and we didn't even have computers, we didn't have cell phones, we didn't have anything. You guys spoiled.
Well, they deduct our pay,
Mm-hmm.
and it goes towards the child.
Oh, really?
So we
So
go,
you don't see it.
yeah,
That's
you
how
never
I
see
got
that
money
money.
for it, yeah.
Oh, well, that's convenient, right? Do you ever go to Midnight Channel though? Because that was my favorite.
That was the thing, yeah.
That was my favorite. Midnight Show was always my favorite because, I got the munchies. Every time we landed, it was always at like 11 o'clock at night. And I got sick and tired of McDonald's every time we were like in Paraguay or something like that. So I was looking forward to coming home and having a real home cooked meal, something available for me to be able to enjoy. So let's go ahead and get started, right? Keep these questions in mind. Are our children prepared for common financial challenges? What's your name, young man? Luis, this is going to be a question for you someday. Do you worry about losing your money along the way? Are you concerned about not having enough money at the end of the month or outliving your income when you get ready to retire? And of course, are you and your family prepared for the next economic crisis? When's the next economic crisis?
Right
Anyone
now.
know?
It's,
Yeah, I do know. Every single day.
yeah.
Every single day, we've had some kind of an economic crisis. Every single day. Regardless of your party affiliation, your money, if it's not coming to you the way that you want it to, that can be considered a crisis, right? So the thing that you don't want to do is exacerbate that crisis by not being financially educated. So that's why I'm glad all of you are here today. I really want to move some of this stuff out of my way, but I'm not going to change the ergonomics of the class. So there's a crisis in this country. Whenever your credit is not right, you have weakened buying power, your wages get affected, limited resources, and a lack of economic protection, right? And why is this important? Because at some point, you're going to be working 10, 20, 30, 40, 50 years, and you're going to want to sit down, right? You're going to want to retire. And a lot of people, just like I said earlier, a lot of people who already had planned to retire are actually having to change their retirement plans because of some of the economic changes that have been going on over the past couple of years. So you can imagine you've been working 40 years, right? It's time for you to retire. And now they tell you you don't have enough money to retire. You're going to have to continue working for the next 4 or 5 years. How do you think that's going to make you feel? And one of the challenges about that is, say you were lucky enough to retire early, say in your 50s or early 60s, right? You're still young, you're still vibrant, you're still motivated, you can do some things. But then they tell you got to go back to work for 10 more years. Now, when you finally do retire after that additional 10 years, you don't have that energy, you don't have that vibrance, right? So you just literally gave away your entire life because the money situation was not handled properly. So all of you are pretty young, so I'm hoping to help you avoid that pitfall in your financial future. And our schools and our employers are not teaching this information, so I'm hoping you can appreciate that this information is being shared with you all today. So why is this needed? I like to go over this screen. You're going to see the screen every time we do a module, right? So just get used to it. Take a picture, a mental picture, and whatnot. But it helps to reduce the strain on relationships due to financial missteps, provide better options for your children, reduce the number of people solely dependent on government aid. Now, again, you guys see what's happening with some of the entitlement programs going on right now? They're in danger. So if we can help you not have to worry about that, then you'll have a more secure financial future. And that's what I'm hoping that this class can help you with. So take notes. Does everybody have a pen, some paper, something to work with? You got a few pens over here. For the new people, if you're here for the first time, raise your hand. Left, can you help me? There you go. We're not going to go over this, but I just want you to have this information. Oh, she just doubled them all up. Can you pass those out? Each one each for everybody got their hand raised. And you got you, Anybody else? New, brand new? One right here. I like the jacket. How about you? I think I've seen you before. I've seen you before. Seen you before. Seen you. Okay. I think the people. Okay. So you want to take notes because this is going to go fast, right? So let's talk about. Really missed that clicker, right? Let's do a quick recap. So everybody that was here before, this is going to matter to you. Everybody that's here for the first time, this is going to matter to you as well. So again, quick recap. In module 1, we covered the budget sheets. That's what you're being handed out right now. Foundation of financial health, right? Adopting an effective budgeting system to manage our income. That's what the budgeting sheet is for. So the key areas to prioritize the budgeting is housing costs, educational debt, insurance, saving and investments, and of course, that all-important emergency fund, right? And if you don't know what an emergency fund is, it's 3 to 6 months of your expenses, right? So whatever your expenses, if your expenses are $1,000 a month, you need 6 months saved, that's $6,000 you have to have in your emergency fund. That is not a savings account. That is a separate fund, so if you have an emergency, you can use that money to help bail you out of that situation, right? So this right here is a little bit of a breakdown that we covered last month, right? You don't want to spend more than 30% on your housing costs, 10% on the emergency fund, 35% on your expenses, savings 10%, investments 15%, and of course your discretionary income is 20%. Now you're going to learn that as you start getting more savvy financially, these numbers are, of course, are going to change. But you don't want more than 50% of your money going to anything that's required, right? So you got two types of debt. You have the debt that you already know, which is fixed, and then you have a debt that you don't know, which is variable. Can anybody give me an example of a fixed debt? The payment that you know is going to be the same every month.
Your rent,
Car payment. Anybody? That's perfect. Anyone else?
your rent,
Rent? Absolutely. Mortgage, right? And what is a expense that is variable or something that changes every month?
groceries.
Come here.
Your groceries?
Groceries?
Utilities.
Absolutely. Utilities? Absolutely, right? But these are requirements that you have to pay every month. So you know you're going to pay them every month. So you have to make sure you have monies allocated for those requirements every month. That's why that budget sheet is so important. But you don't want to go more than 50% with that. Because if you go more than 50% with that, you'll become what is called over leveraged, right? Because if it gets to a point to where you're more than 50% of that, it starts to threaten your discretionary income and your emergency fund, right? And then you'll end up doing something that a lot of people do whenever they get threatened or over leveraged. They start overusing what? Credit. And that's why we're here. So let's go ahead. And I really missed that clicker. Can we go back to 129, right? So just quick 4 steps. Don't spend more than you make, pretty obvious, right? Manage your debt, create an emergency fund, and set financial goals. These are things that we already covered before, right? And let's talk about what a good credit score looks like, right? And how to make sure you have a good credit score. So when you're using your credit, whether you have, say you have a $100 credit card, and you spent $15 on a credit card, what is your credit utilization? 50%. Yes, if you had one credit card that's $100, another credit card was $200, another credit card that's $1,000, how much total credit do you have? First credit card is $100, the second credit card is $200, the third credit card is $1,000. How much total credit do you have? $1,300. And if you use 50% of that, how much credit have you used? 50%, right? $650, right? But that takes it over. So if you want to see where your credit is going to be looking for your credit utilization, anything from 0 to 90% is pretty excellent. Now, a lot of people, they ask me, well, Tony, what if I don't use my credit card at all, right? Well, if you don't use your credit card at all, are you building any credit? No. So let's talk about those fixed and those variable expenses that you know you got to pay every month. When you go back to your budget sheet, determine which one of those, which of all of those payments that you're making that you have to pay every month, and just use your credit card to pay for those. And at the end of the month, just pay the credit card off, right? Now you're building credit with money that you were already going to allocate for bills that you had to pay for, period, right? And as long as you pay it off before the 30-day period, guess what? You don't get hit with any additional interest, and your credit starts to look really, really fantastic. Does that make sense? All right. So let's go to this next one. Okay. How to use it. So again, do not go above 30%. Apply for cards with low interest rates, preferably to give you some cash back. Anytime you get cash back on credit cards, especially if you go into the grocery store. Why is the grocery store such a big deal to me? Does anybody know? How often do you go?
Every 2 weeks.
Every 2 weeks. Who goes to the grocery store more than every 2 weeks? I go to the grocery store every 3 days. I don't know what I want. Yes, ma'am.
Oh, no.
Okay, I go every 3 days, so I like that cash back, right? I get 1 to 3% on stuff that I'm going to buy anyway. That's great, right? So you also want to use credit for everyday expenses, then pay it off in full. Use the benefits for credit-free miles, companion passes, all this other stuff. Frequent flyer miles are great. I used to use my credit card miles for free rooms, and it was so good that I could actually send the free rooms to my kids. Right? So they'll be traveling somewhere. Hey, Dad, I need a hotel room. No problem. Go ahead and hook them up. Right? Didn't cost me a cent because I was already paying for that with my credit cards. Right? Great way to use it. How to pay off debt. Track all expenses, your budget sheet, and payment due dates on your budget sheet. Use the snowball method. Pay down the smallest balance first and apply that payment to the next balance. What does that mean? So again, you got one credit card that's $100, another credit card that's $200, and another credit card that's $1,000, right? If all three of them have a balance, which one do you pay off first?
$100.
And then which one do you pay off next?
200.
And then after that,
1,000.
you got an A, right? And A's are good in college, right? Y'all some use A's? Or is it 4.0 or what is it? I don't know. Okay, so if you want, you can use these debt management systems so you can be able to help you understand how to reduce that. So if you want to take a picture of that, debt reduction calculator is a good thing to use, right? There are a lot of calculators online that you can use that are great. Financial calculators, mortgage calculators, certificate of deposit. There's a bunch of them out there. But today, you go ahead and look at the debt reduction calculator, figure out your FICO score, and there's a hand. Yes, sir.
Yes, sir. I have a question. I'm just thinking of my son. Do you have to be 18 to open a line of credit?
No. To open a line of credit, you said?
Yes.
Okay, so for a business?
No, like if I wanted to get my son a credit card or a car loan when he's 16.
Your son can have a credit card, but because he's under 16, you're still gonna be liable if something happens to that, you understand?
Right, but he would be building credit?
Yes. Now, what's interesting about that, which is a great question, say you have a credit card, your credit card is $10,000, you have a $10,000 credit limit, right? You can call the credit card company and say, what's your son's name?
Juan.
I want Juan to be on my credit card. How long have you had your credit card?
Since 2013.
Okay, so right now it's 2025. You've had that credit card for 12 years. Check this out. You call up your credit card company. I want my son on my credit card. As soon as they put your son's name on the credit card, how long is your son's credit history? 12 years.
My son has a credit card and he has the same credit score as I do.
Yep. Instantly.
But
Yes,
if
sir.
my credit score go down, I can remove it. So he
Yes,
doesn't get.
and
his
you want,
credit-
you don't want that ding. Thank you for that. That's facts.
Mhm.
Yes, sir.
So I've read a lot about people paying the credit cards in 2 payments. So
Why you going ahead, man? Didn't the teacher tell you not to do that? Why you going ahead? What are you doing? No, I'm just kidding. That's right.
you guys talk about that?
I will be discussing that. Yes. But that's a good point. Thank you all. Thank you all for the point. Awesome. Does Juan have a great credit right now? I'm sorry, Luis.
Oh, yes,
Okay.
over 800.
Over 800.
And he has his separate credit card and
Let me
everything.
borrow $20, bro.
So they just told me, if I start seeing my credit score go down, just remove him.
Yes.
And once I fix it, because he's gonna keep that credit score.
And that's what's really awesome about that, because once you learn some of the tricks of the trade with credit scores, does anybody know why having a high credit score is important?
So loans.
It's more like.
Loans,
Purchase something. You have
Purchases, yes, exactly, right? So what happens if you don't need your credit?
You don't use it.
You don't use it, right? Do you ever not need your credit?
You have the cash.
That's a serious question. Y'all don't even know it, but I'm gonna tell you why.
You do need it.
You do, why?
Because it's like a record, so
It
they can,
it is a record.
they always check that, even if you're not gonna buy stuff.
When do they start looking at your, whenever you get ready to apply for, college, how far back do they look at your grades? High school, right? They go back, right? The same thing happens with your credit. But guess what? Another reason why your credit is so important, that job. Say you want a job in the financial field, right? They're gonna check your credit. They wanna make sure you're not gonna try to steal stuff from them, right? So yeah, your credit is gonna be very important at all times. So we wanna use that snowball calculator, and we wanna make sure that whenever our credit is dropping, you take those extra people off of there as soon as possible. And then put it back on when it goes back up. But don't let the credit drop, right?
Yes,
Okay, good. Okay. How to maintain that what?
800.
800. I said 700, but she just went ahead and went 800, right? So keep your credit card utilization below 30. Review your credit report constantly. Use your identity IQ to review all 3 credit bureaus in Equifax, TransUnion, and what's the other one? Experian. And track your credit score, Credit Karma. Pay your bills on time. Pay your bills before the statement closing date. When?
15 days.
And 14 days? There you go, all right? And then pay more than the amount that is due. Why? Why? Exactly. So say your credit card, have you guys seen those introductory credit cards? They give you like 0.9%. And then you have a 30-day late payment. And you don't pay attention to it. What happens to that 0.9%? So what? Whatever the maximum they allow. That small print, sometimes it's 27.9%. Do you know the credit card companies can charge you pretty much whatever they want? Right? Now, they can't change because of the new law that came out. They can't change that without letting you know. So they will send you a letter saying that your interest rate has been raised. Now, whenever you get a statement from your credit card company, do you actually look at it? You should look at it, because if you're paying $100 a month and your credit card balance is $100, and next month you still got $50 left, what's wrong with that? You shouldn't pay that off, right? You didn't. Why? Because you just paid $50 for the interest and $50 towards the principal of your debt, right? So you want to make sure you understand how they are charging interest on your account. But again, you want to make sure that if you're going to be paying your bills, that you're using your credit card and paying it off. If you pay it off twice, you actually get double the payments credit, right? So that actually makes it look even better. So I can talk to you about, your payment history, how that breaks down in your score, right? So there's a couple of things I want to go through real quick. All right. Quick math test, because I like to go back sometimes every now and again. Does everybody understand compounding interest? Show of hands who don't understand compounding interest, except Luis. Okay, great. So compounding interest, banks usually offer you the least amount of interest on your money putting into that bank. Even if they offer you compounding interest, it won't be more than 2%. The best bank accounts offer something like 5.13%. Those are online banks, so they don't have anybody to pay, so they give you a little bit extra. Well, on average, your savings account is probably doing 1% or less, right? So we use what is called a rule of 72, where you take your annual rate and divide that into 72 to determine how fast your money is going to grow. So if your bank account is doing 1%, 72 divided by 1 means how long is it going to take your money to double? 72 years, right? Now, that being said, that's money that you're making in your savings account. Does anybody know how much they're going to charge you if you decide you want to get a loan? Up to 32%. Wait, they're going to pay you to use your money 1% at best, but they're going to charge you 32%. And this is why compounding interest is so important. So for those of you who don't understand how that works, the compounding interest is taking the principal amount of money that you have plus the interest that you earn. And then the next month, it's going to take the interest and the principal, and then it's going to add some more interest on that. So this is you making money, which is great, but this is also how they charge you. So going back to that FICO score again, if your FICO score is like Luis, they're going to give you that 0.9%, no problem. But if your FICO score is 649 maybe, then your FICO score is going to require them to give you a higher interest rate. You might not get that introductory. You might not get that promotional. You might not get that A+ rating. So imagine if you had an 800 FICO score, they offer you 0.9%. But guess what? If you have a 649, now they're going to offer you 7.9%, right? So if those of you that might be interested in looking at houses or getting new cars, these interest rates matter because, again, using a rule of 72, it also hurts you. So you can imagine if you're getting a 7% on your loan, whether it be an auto loan or a home loan, and you get a 30-year fixed, they're going to be charging you 77% for 30 years. So that means the interest on your account is basically going to double every 10 years, right? So if your house is worth $500,000, in reality, you're going to be paying about $1 million or more by the time you pay it off, right? So the sooner you can pay that off, using that double payment scenario like the credit card, the sooner you pay it off, the less interest that you pay over time. And that's what you want, right? So going back, thank you for your input on that. Just a little quick math test. All right, so avoid common financial pitfalls, right? We want to make sure we avoid those high interest debt. Those credit cards that come on. If they tell you that it's 1.9% and you know you're going to make your payments on time, it might be okay for you to get it. But if you run into a jam, you better call them. Because if you don't call them and they go ahead and pump that back up to that 27.9, that 29.9, sometimes even higher than that, you can really end up hurting financially. You want to avoid any impulse shopping. Does anybody like gadgets in here? I got only one gadget guy. Are y'all telling me the truth right now? No, only one gadget person in here? All right, then thank you. Don't make me struggle. So if you like gadgets, have you ever seen what is it, Temu? Is it Temu? Does anybody know what Temu is? It's like this little website that gives you all this cool stuff for like really a little bit of money, right? And what they do is as soon as you click on it, you're looking for one particular item, right? I want a widget. I want a green widget, right? But before you can actually get to your green widget, they end up having all these upselling pop-ups come up. And it all sounds really good. So you only went in there to get one item, but when you get ready to check out, you got 15 of them because you saw all this other cool stuff. Meanwhile, you still got to pay your rent, your gas, your lights, right? Your phone bill and all this other stuff. But you got all this cool stuff that you can't use because you don't have a place to stay now. You spend all your money, right? So definitely avoid that. Over leveraging your investments. If you cannot afford to lose the money, don't invest the money. Does that make sense? I see you looking at me, but that doesn't mean people understand it. You know why? Because I did it, right? Those who saw me last month, when I was a day trader, I over leveraged everything because I was really excited about our company going IPO. I was super excited about all these new tech stocks that was coming out. I was like, I need to invest in everything, all the prospectus. The prospectus is basically a report on the potential success of the company. And I was like, wow, this looks like I'm really going to do well. 2001 happened. Everything tanked. And then when I finally recovered from that, 2008 happened, and I ended up getting hit again, right? So, for those of you who know, I was a little bit leery about going back into the market again after being hit twice. So you definitely want to make sure you watch out for that. Neglecting financial planning. Many people overlook comprehensive financial planning, right? I don't care if you make a lot of money or a little money. You want to plan that out. The budget sheet that you have right now, that's an opportunity for you to really take a snapshot of your current financial situation every week. This is important because things do change, right? You might get a pay raise, you might get a pay reduction, you might end up having a life event, like you have a child, might get married, might purchase a house or a car. When these changes happen, you want to be able to see in real time, how does that affect your financial present as well as your short-term and long-term financial future? Make sense? All right, then of course, not calling your creditor can be a financial pitfall. So if you end up in a situation where you potentially might lose your job, right? If you lose your job, you can't pay your bills, right? Call a credit card company. May I have an extension? Right? Can you cut down on the interest rate for the next 6 months until I get caught up? These are conversations that you can have. They're willing to work with you because you've always been on time and you called them rather than them chasing you. Does that make sense? All right, great. All right, here we go. So, all that other stuff is pretty basics, and now this is what I really want you to pay attention to, right? How easy is it to make money today? Anybody know?
Easy.
It's pretty easy, and it's not, right? How easy is it to keep your money today? It's not. There are so many forces out there trying to take your money, it's not even funny. Not to your regular bill collectors, your rent, your mortgage, your gas, your lights, your phone, your car, insurance companies, all that stuff is normal. They want your money. But now you're getting emails, phone calls, text messages. They might even be sending a carrier pigeon over to your house. I don't know. But they are literally trying to get your money out of you every chance that they get. And it's not just the normal legal upselling tactics. You got people literally trying to scam your money. You might be getting phone calls from someone from other states, other countries. Hell, it might even be from other planets as far as I know. But when they call you, they're asking you for your bank account information. They're asking you for your personal information, social security numbers. They're asking you for all this information, and it looks real. Show of hands of everybody who's gotten an email that looks really real, right? How did the email look to you, sir?
It looked like my Citibank email, and it just looked a little off, like the email was like Citibank at Ymail or something like that. But all the other characteristics, like the logo was there, but some of there was like misspellings, and I was like, and I called my credit card company, and they said, no, that wasn't us. I'm trying to get your information.
Well, you did exactly what you were supposed to do. You called them because if it looks suspicious, it is. How about you, sir? You said it.
Yeah, right now there's a toll-free, the toll lanes. They're sending messages to your phone saying you have to pay because you were on it, but you weren't actually on it. It's just a scam.
Well, I keep getting these text messages saying I'm getting like some kind of a stimulus payment. It looks really, really great, right? It's not true. And most of the time when you get those phone calls, I'm going to go ahead and fast forward to this because I want to talk about this. This one right here gets you in trouble, right? Okay, that's not really. All right, so I had a drink of water here someplace. Give me a second. I want y'all to take a look at that screen. I'm gonna get this beverage here. Oh my God. Man, I'm such a dinosaur. That's a cool little container right here. I thought it was a Red Bull. I don't do that. I'm already hyped. So take a look at this. For your credit card, scammer may claim to be from your issuing bank, just like you said, sir, right? They'll be offering better interest rates or verifying purchases, right? But when they're doing that, they're asking you for your bank information, your name, social security number, or whatnot, right? You got here, be cautious even if the phone number or email address looks legitimate. Citibank does not have a YML account. They don't have a Gmail account. If it's not at Citibank or something official, it ain't real, right? They may ask for card information to fix or issue or gain an advantage. No, they're not going to ask you all that over the phone. Scammers may pressure victims with fake urgent messages. Who has gotten an urgent message? You got to do this right now, or we're going to cut off your gas. We're going to cut off your lights. Or we're going to take your cell phone. Who's gotten that? I get them all the time. I think I'm on the black web or something like that. But I saved the best for last. Never provide or confirm personal financial information during unsolicited calls. So let me tell you, who wants to volunteer real quick? I'm gonna mess with somebody. Who's gonna volunteer real quick? You wanna volunteer? Come on up. Oh, you're shy? That's all right. I want you, because I like that hat. Come on up here. Right? I pick on people. What is your name, sir? Jose? Okay, it's Jose. Let me ask you a question, right? It says never provide or confirm personal or financial information to unsolicited calls, right? I just called you. Bling, bling. Hello, Mr. Jose. How you doing?
Yeah, I know.
Okay. I'm doing fantastic. Are you having a great day?
Yeah.
I just got it. Why did I just get it?
Because he said yes.
Because he
And
said
that's
yes.
verbal, they can use that as a verbal.
They can use that as a verbal response. Thank you, I appreciate that. right? See how easy that was? It was just a simple conversation, but because I made him say yes, now I can use that yes and apply it to everything I want to go ahead and scam him on, because I heard him say yes. See what I'm saying? So anytime someone calls you from an unknown number, you don't know them or whatever, you don't give any affirmations at all. The word yes should not be in your vocabulary until you know exactly who's on that phone, right? Is this Tony Warfield? Yes, they got me. Are you having a great day? Yes, they got me. Are you currently working? Yes, they got me. They're gonna ask you these yes or no questions. So, and I want y'all to understand how easy this is. You'll notice that they always ask you specifically yes or no questions. Have you noticed that? Why? Because they want to get that yes out of you. They're not going to ask you, where were you born? Helena, Arkansas. That's not an affirmation. You can say anywhere. But were you born in Helena, Arkansas? Yes, I got you. See that? So that's something, thank you, Jose, I appreciate your help, right? So please pay, matter of fact, can you take a picture of this? If you got to have your phones. I really want that in your head. So anytime you get an email, text message, or phone call from any organization, person that you do not understand or know, do not provide any affirmations. What is the biggest problem that we have out today? Does anybody know when it comes to this? Man, Jose is the sharpest person in class. Gold star for Jose, it's AI. Because now you got a whole lot of robots calling you right now. Now, whenever there's an election time, you get a lot of robots calling you then, right? Those are usually pretty good. They're just telling you what's going on. They're not asking you for anything. So if you get a phone call, text message, or email that asks you for anything, be suspicious. Be very suspicious, right? We want to make sure we protect your credit, because let me tell you why this is important. If they get an affirmation out of you, now they're going to have you applying for a whole bunch of stuff that you did not know about. Sooner or later, you're going to end up being late for a whole lot of stuff that you never knew about, right? Now your credit goes, but you don't know about it. And if you're not checking your credit score every month, every week, or whatever, now you want to go buy this car. Last time I checked, my FICO score was like Luis, it was 800. Now I want to go buy this car because they finally came out with this brand new Charger that I like, or this brand new Corvette, or this brand new whatever, I don't know. And now I know I'm gonna get a great interest rate because my credit score was 800. I go there, I'm sitting there, I got my $15,000 down payment, $200 down payment, or maybe I'm trying to buy it with my looks, I don't know. But whatever it is, I'm sitting in there knowing I'm gonna get a fantastic fantastic interest rate, and they come over to you. They're excited about you when you walk in because you look like a paying customer, and then they come back and they look like you just lost your dog. Well, you won't be getting this car. Why? Well, have you checked your FICO score lately? Yeah, all the time. I had 800. It has an 8 in it, right? It's 648. Well, what happened? Next thing you know, you get your credit report, and all those times that you said yes is all those times that they put that on your credit report, and it's all late. It's completely tanked your credit, right? So you definitely want to monitor that as often as humanly possible. Preferably every month, or sooner if you want, especially if there's any changes. So let's get a look at some of these scams. We'll talk about some of them right now. But the imposter scams, right? You've heard of phishing, smishing, vishing, farming. Anybody know anything about those? Yes. Tell me about it. Tell me about it.
So, phishing, which way you describe, they'll call you.
Does anybody know when phishing happens the most?
When you click links.
When?
When you click links.
I didn't hear that, I'm sorry.
When you click unknown links.
Yes, but when does that usually happen? Do you know?
Emails.
Emails, but where does that happen?
You're applying for jobs.
When you're at your job. Let me tell you why this is poignant, right? So you're sitting at your job. You got a nice, big, comfortable, cushy desk, nice, big, huge computer, and you pretty much got done with your work pretty early, right? So now you're just going to go surfing the internet, and they always tell you don't be clicking on stuff, right? But you see this thing, it looks really, really good. You're checking your email, and it makes sense. It just came from your boss, but you don't realize someone actually had sent in the Trojan horse. got your boss's information, they just sent you an email. You read this email, question, when was the last time your boss sent you an email talking about, hey, come play poker with us? Has your boss ever invited you to play poker? Has your boss ever invited you to a party? Has your boss ever asked you out on a date? No. So why the heck are you clicking that email? Right? It looks suspicious. So what you do is instead of responding to the email, you call your employer, you call your boss, supervisor, whatever. Hey, I got this strange email from you. I didn't send you an email. That means now we got a Trojan horse somewhere inside our computer. It usually happens at work, right? So snitching, a scam or scammers send fake text messages. I get them every day, and I just delete them immediately. So wherever, my name is all over the place, my phone number is all over the place. It's kind of par for the course. But because I know I'm going to get it, if I don't actually know you, I'm not going to respond to that, right? Farming is a scam used to direct users to pay phony websites, right? Anyone see any of those? What about phishing and phone scam? Anybody got any phone scams? Somebody calling from some nation outside of the United States saying that, if I got $10,000, I got $100,000, I want to hold it for you, but I want to be able to trust you. So can you send me $500 to make sure that I can trust you with my $100,000? Have you ever seen that? You know who gets hit with that the most? Old people. They get hit with it all the time. So your grandparents, they've answered those calls because they don't get a chance to have these discussions like we are having today, right? So let's look at overcharge scams. Anybody get those? Right? You get a message saying you've been overcharged for something and you're entitled to a refund. Walmart sends those out a lot, don't they? No, the scammers say they're from Walmart, and because I get those as well. Potential signs of scams, request to click on a link. Whenever you get a text message or an email, does anybody actually click on any of those links? Social media enthusiasts. Anybody in here love social media? All right, so on social media, whenever you get those messages from friends, and have you ever seen the ones where they say, send this to 10 people? Have you ever seen those? But if you send those to 10 people and it has a link on, what are you actually sending? Whenever you get those messages that says, send this to anyone, send this to 10 friends, and they try to give it to you as you're doing it. You don't love me unless you send this to 10 people. Have you seen that? Yeah, as soon as you send it to 10 people, next thing you know, that same message gets repeated over and over and over and over again because now the virus is in your phone or it's in your laptop, or you end up having your Facebook page closed because you just propagated a virus, right? So you got to watch out for that. So you're told you must act immediately or that is the last chance you're going to get. And because we're so in the mood to get something right now, we don't want to miss out on something. We go ahead and click on it. It might be okay this time. It's never okay. It's never okay. One thing I will tell you about all these scams is you cannot miss what you never had, right? So don't worry about losing out on anything because you might end up losing something if you click on some of these scams. Make sense? All right, let's look at I don't see this page. Government impersonator scams. Anybody get VA benefits in here? Okay, we got some VA benefits. Anybody get student loans? Okay, no FAFSA or anything like that? Okay, because this would be important if you're getting something like that. Potential signs of the scam: the voice sounds robotic, generic references, law enforcement like the local police, threats to fine, arrest, or even deport you. Is that happening a lot lately? Have you been paying attention to the news? It's been happening a lot lately, right? And right now, I wanted you to pay attention to this last one because that's actually pretty severe. You've been hearing about ICE going around, rounding up a lot of people, and they're using stuff like that to get you to respond. And it makes sense because people see it. It's on social media, you see it on the news, you see it yourself. They're walking up and down the street, they're taking these undercover vehicles. So now, because people know that is happening, they're actually sending these type of messages out to you, and it's terrifying you, and you don't want to get caught. So you respond, now they got you, right? So I don't care if it's not someone physically knocking on your door, do not pay attention to any of that. Can we do that? All right, great. Let's see. And online shopping scam. Any online shoppers there? Any Amazon users? Only 2, 3? Come on, are you serious right now? Have you seen this stuff on Amazon? It's great. What do you buy? Oh, that's not even none of my business. I'm sorry. You might say the wrong thing. Whenever I like Audible, right? I like to buy online books, right? Man, when they start sending those deals, right? Have you seen those deals? You just gotta get them, man. 30% off, 40% off. You just gotta jump on that right now. But it's Amazon, and it's AMAZO space N. What's wrong with that? It's not Amazon, right? So like someone said earlier, it doesn't look quite right, right? Messages with misspellings or poor grammar, offers that seem too good to be true. Most likely they are. A website without a secure connection or URL. Do you know what this is? Is this secure? HTTP, hypertext transfer protocol?
No.
Is that secure? Why not?
It's public.
It's public, right? What is that? Is that secure?
Yeah. And
That's what that S stands for. So whenever you get a website where it's a hypertext transfer protocol with an S that's secure, right? You want to see that. If you don't see that, or you don't see any type of an opening to it, it's not right. You might see HTTPS : and then just the website, but no forward slashes. That's still wrong, right? So you want to pay attention to that. All right. And let's take a look at a couple more. I really want y'all to see this: debt relief and credit repair scams. If your credit has some challenges, I got a couple of friends of mine that are credit specialists, and they tell me, hey, Tony, you know, these people are really having some challenges. Well, why are they having challenges? Well, they'll tell me why they're having these challenges, and they'll tell me how desperate they are, right? Well, desperation makes you look for anything to help bail you out, right? So a company offers debt relief or credit repair for an upfront fee. They want you to go ahead and send them $2,000. They don't have a website. They don't have any way for you to formally contact them. It's just some person calling you, asking you for this money, and they're going to take care of everything for you. 6 months later, you actually have a worse credit situation, and they never called you back, right? Potential signs of a scam: the company reaches out to visit you first, a guarantee of positive result. You cannot get a guarantee in finance. You understand it? I really want y'all to appreciate that, because if your credit situation, how do I say this? When you get your credit repaired, do they teach you better spending habits? Do they teach you better budgeting habits? Do they teach you anything? No, they just fix it, right? But if they're not teaching you how to fix that, then chances are you're going to go right back into that same situation again. That's a sidebar, but it's just something I wanted to be able to share. But you want to watch out for that. A request for a large upfront payment. Why? You haven't done anything for me yet. Now, there are people who actually charge you a considerable amount of money to be able to take care of your credit, but most likely you're going to meet them in person. You're going to be able to talk to them face to face. They're going to have some kind of credentials to help you understand this person is legit. If they do not have something that proves to you that they are legit, they are not. They are not. I really want y'all to appreciate that, right? So, anybody want to buy a house in the next 10, 15 years? Why?
To put my family in there?
Huh?
to own a home.
To own a home. No, can I tell you why though? All right, so you have a mortgage and you have a rent. You have rent. Which one's most expensive? Rent is. Why is rent most expensive?
Because it's not going back to you.
It constantly goes up. But there's another specific reason why rent is going up.
Because the economy, it depends on where the economy is at.
No, it depends on the fact that you've got terrible FICO score. Because if you had a great FICO score, you buy a house. Right? If you can afford, listen, this is real talk. If you can afford $3,200 in rent, but you cannot afford a $2,500 house note, there's a specific reason why. Because you cannot get the loan to be able to take care of that $2,500, right? So you're going to end up paying $3,200. You're going to have to pay a premium to not be able to own what you're paying for. Meanwhile, you're paying for someone else to own the place where you call home. So it's best for you to understand how to fix your credit problem. Now, California is very, very difficult. It's true. Even I'm thinking about moving because I've been waiting for a house to open up in my town and it still hasn't happened. Tony, why don't you move? I don't move because I have political interest in that town. I have to be a resident of that town to be able to run for office, right? But it's like, do I really want to do that here now? Because everything is so ridiculously high, right? So if you're looking at a house that costs $500,000 this year, next year is going to be $600,000. Those of you that consider real estate as an investment, any real estate investors in here or potential real estate investors? Okay. What do you think the future of real estate is in California?
Well, right now, it's looking like a lot of people renting out their homes.
It is. It is. Okay. Do you see a lot of people leaving California? Or do you see a lot of people coming into California? The answer to that question is yes. Let me tell you why. Okay? Yes.
You also see a tick on ADUs as well.
ADUs, SB9, that was a big deal. Yes. Okay. So yes, there's a lot of people migrating out of California, but you still have a net same number. It's still the same number of residents in California. Why is that? Because you got a lot of people migrating back into California. Now, what ends up happening is, this is really, really strange. People in California are used to paying a certain amount of money. Do you agree with that, right? Well, they take that certain amount of money that they're used to paying and they go somewhere else that's driving up the property costs in these other locations, right? So once they start driving up the property costs in these other locations, now there's not really a net gain, as much of a net gain as you hope for in certain areas. So now you start looking at other things like the weather. This is April, and this is literally the coldest it's going to get this year, right? Everywhere else, you got the entire sky falling, right? The weather here is what brings everybody to come back, more job opportunities, more higher pay, whatever, but you're just going to pay more for everything else. But it really does, there's like a two-way street with people coming in and out of California. So that being said, the real estate is always going to do well. It's always going to go up. Your property value is always going to appreciate, right? So if the better your FICO score is, the better your chance of getting into a home to where you can make sure that you can get that home, keep that home, and not have your money just being, blown up or rented. Now, I mentioned that for this reason. So now that you have this house, right? Now you got your house. We were talking about this last night. I think I got a couple of people in here that was with us last night. Now that you have your house, if you have an investment, you have stocks, you have bonds, all this other stuff. If you have shares in any type of stock or bond or capital gains of any sort, and you still have it, but you have not sold it, you don't necessarily have that money. Does that make sense to you? Let me give it to you another way. Say you have 1,000 shares of stock for widgets, right? You have 1,000 shares of stock for widgets. Each of these widgets is $10, right? The market goes up 50%. Now each of those widgets is costing about $15, right? So that means you made $5, right, on each of those shares. Does that make sense? Did you make $5, or your share is worth $15? The shares are worth $15. Now, if the market goes up again another $5, the shares are worth $20, right? Do you own that money? Any takers?
No.
Not until you sell it.
Not until what?
Not until you sell it.
Not until you sell it, right? Now, the reason why I brought that up is because what's happening today with people's 401ks, 403bs, 457 retirement plans, right? What has the market been doing over the past few weeks? Dropping like a rock, right? This is why this is so important, because I'm going to close with this, right? The reason why this is important for you to understand, making sure your credit is right, making sure your financial situation is right, is because you want to be able to watch out for some of these pitfalls. So what's been happening over the past several weeks is the market has been dropping like a rock, right? But if you had 1,000 shares of anything, even though the market is dropping, if you didn't sell your shares, you still have 1,000 shares, right? So if the shares were $10 per share and now they're $5 per share, that just means that your $10,000 worth of shares is now $5,000, right? But you still have $1,000 in shares. Why is this important? Because if you are in your 30s, you got time to recover those losses. You'll never get the money. Once the money is gone, the money is gone. But you have time to recover those losses. This is important for you if you're in your 30s. So the more financial education that you get, the more savvy you will become, so you can be able to watch out for some of these pitfalls to be able to make sure you don't take any losses, any actual losses, and any losses that you might have in your employer-based retirement funds or anything like that, you can have enough time to recover from that. I say that because if you're 50, 60, 70, and that happens to you, you're in a situation because you don't have the runway, you don't have the time to recover from all of that, right? So if you're 65, I had a young lady, she was at the town hall meeting in Corona the other night, and she was talking about some of the potential cuts. And I don't want to be a downer, but I really want you to have this in your head. I want you to understand why this is important, and I hope you continue to invest your time in learning more about your money. So this young lady, she's about 67, I think she was. And my congresswoman is 45, her mother is 84. My congresswoman, she takes care of her mother. She has Alzheimer's stage 4. And she takes care of her mother's responsibilities, bills, and everything. But even though she's a congresswoman, she cannot afford to take care of everything on her own. So she depends on those Social Security checks. Now, why is that interesting? Because if you don't have the right medical insurance, you don't have Medicare, Medicaid, Medi-Cal, if you don't have the right amount of money to be able to sustain you, long-term care insurance and all this other stuff, that money that you're getting from your Social Security check can be life or death. So one of the young ladies from the audience, she got up and she was very concerned because she has health issues. And you know what she said to my congresswoman? She said, if my Social Security gets cut, that could be the end of my life because I cannot afford my medication, right? That's how serious this stuff is, okay? Now, imagine being in a position to where you are dependent on a government check in a situation that we are in today, right? So I'm coming out here every month to be able to share this information with you because a lot of the things that happened to me were pretty bad, okay? But I grew up in a time where I actually had enough time to recover. There were enough there were enough public plans or opportunities for me to make money to be able to recover from some of those losses. You know, I told you I was homeless. I told you I lost my job. You're talking to a guy that always made six-figure incomes until I didn't, right? Every time I got a job, 6 figures. Every time I lost a job, no figures, right? But I always managed to rebound because there was a facility for me to be able to do so. But right now, that's becoming more and more difficult. You understand that? And because it's becoming more and more difficult, we have to be better stewards of our financial situation. That emergency fund that I mentioned is paramount to your financial situation. Making sure you understand your credit and keeping your credit right is paramount because you don't want to pay all that extra money in interest rates if you don't have to, right? Being in a position to where your money works harder for you is essential because you don't know where your next paycheck is going to come from, even if you think you know. Right now, how many VA workers got fired over the past couple of months? Anybody know? VA workers, state workers.
Was it 80,000?
80,000?
What did that mean?
Right? Can I tell y'all what a VA worker, the job security of a VA worker, a state worker, or a government worker? A couple of years ago, if you worked for the county or the state or the VA or any entity like that, your job was almost guaranteed. They didn't want to go through the process to try to replace you. You could be a serious butthole, and they will find a way to work with you to keep you there because they don't want to go through the process. Your job was as close to guaranteed as possible. So whenever your job is as close to guaranteed as possible, you're used to that $5,000, $10,000, $15,000 a month. But here's the problem. Because your job is mentally guaranteed, you know you're going to get that $15,000 a month. So are you really planning for the future just in case you don't? Most people are not. If they're getting paid $15,000, how much money are they spending every month? $15,000. Most people are living Friday to Friday right now. So if you're not managing your money properly, taking care of, following some of these financial principles, a situation can and potentially will arise where that guaranteed monthly payment is no longer guaranteed. And you're seeing that happening in real time every day, right? So when you come to these classes, I really appreciate you. Sometimes they can be boring, but let me tell you, the best thing that I've got, someone will say, hey, Tony, I tried that. It worked. It does work, right? A simple phone call, it works. Watching out for an email, it works. Paying your credit card bills twice a month, it works, right? Getting yourself in a better financial situation, it works. Saving some money to make sure you have it for a rainy day, it works, right? But being able to have the financial information available to you and then being able to offer that to your children like Luis, how is it Luis has a higher FICO score than I do? Right? You're the man, right? So these little financial tips are essential because a lot of the stuff might go over your head until you don't really realize you maintain it. You don't realize it until the situation arises where you have to use that information. Then it becomes invaluable. You'll end up having conversations, dinner table conversations, work conversations. People are like, hey, what do you think about this? Someone asked me about how do I invest? Someone might ask me about a life insurance policy. Someone might ask me about SPY, those group investment transactions. All these different things people are talking about, but the one thing I need you to talk about first, investing, going back to the financial pyramid. Anybody remember what the financial pyramid looks like? At the base of the financial pyramid, right? At the top of the financial pyramid is investing. At the bottom of the financial pyramid is protection. You need to protect what you have, right? The best blessing that you could ever have is to want what you got, right? And if you got what you want, that's a blessing, but you can also lose it. So you want to protect that, right? You want to get that emergency fund. You want to get those savings accounts. You want to make sure yourself is fine. You are financially secure. And then once you are financially secure, now you can start investing. Now I will tell you this. Depending on how confident you are about yourself, right? Say you got a paycheck. Your paycheck is $10,000. Who do you pay first? Say that again, Jose.
Yourself.
No, he's not saying Jose. Sorry about that. You pay yourself first. Now, when you're paying yourself, are you using some of that money for your investments, or your emergency fund, or your savings account?
All three.
You can do that, right? It's essential that you do that because that's why that budget sheet is so important. And let me show you this budget sheet for those of you who don't have it. If you haven't completed this budget sheet yet, I want to talk to you about this in closing because I got no minutes. I got 30 seconds, right? So you're looking at this budget sheet. On the bottom of the budget sheet, you're going to see where it says discretionary income, right? I want everybody to say discretionary income. Let me hear you say it. Keep it in your head because your discretionary income, that's the money that you're going to use for everything outside of your required spending, right? That discretionary income could be the difference between you being dependent on Social Security and you living in Aruba on your own dime. I kid you not, right? So I want you to think about all the stuff that you might spend your money on, right? Is it that important? Earlier in the presentation, we talked about watching your excessive spending. Is it that important, right? Do I really need $800 shoes? My son, by the way, $800 shoes. I'm so glad he's paying for them now. Oh, I did pay for them. It was only one pair. Come on, man. You got an A on this report card. Come on. But do you really need $800 shoes? Do you need a $10,000 purse? Yes, I do need a $388,000 Aston Martin Volante 2025 convertible silver. Yes, I do. Oh, did I say that out loud? Okay. Yeah, certain things you're going to want, but you want to be able to put yourself in a position where you can get them, right? But if it affects your ability to have the lifestyle that you want, reconsider that spending. You want to monitor your spending habits. It's essential that you do so. So I'm going to open up for questions. I'm going to get you guys out of here. Guys and ladies out of here. Anybody have any questions? No questions? Does anybody have any experience where they lost some money in any scams or anything like that? Does anybody have any? Yes.
I lost my money to Cash App.
Cash App,
Yeah, I got scammed out of like $600.
$600,
Yeah.
and you can't get that money back, can you?
Yeah, and then they also deactivated my account. So
And
I
they
can't even
deactivated
use
your
that. Yeah.
Not cool. Yes, sir.
So my girlfriend, she applied for a job
Mhm.
and she got it, sent her the offer letter, and then told her she had to buy software. So they mailed her a $5,000 check to buy software. And it looks legit.
It looks legit.
She went to the bank and they were about to cash it in. They saw it and it was like, oh, it looks
Did they
legit.
arrest her for that?
No, but they did it because she had all of the
Yes.
documents saying that it was a job that she applied for. But
Okay,
it was a scam.
okay.
And they're trying, I guess, what they're doing now is you put that into your account, they're able to access it.
They're able to access your account. That's really interesting, right? Thank you for that. Anyone else? Yes.
Yeah, I heard a lot of ones like a lot of scams is parking scams, like
Parking
QR code-
scam?
The QR code scams are getting a rise.
Ooh.
Like
So,
you scan a QR
I
code.
promise you,
think
my
it's-
QRs are good.
Like you be out in a parking lot, it says like you scan a QR code to pay for parking, and it's not the car parking company that it owns. It's,
Wow.
It goes to who knows where. And then
Oh, that's not cool. I didn't know that.
I didn't
The
either.
one that I got in trouble, I actually got hit with this one for $150 with a company credit card. So when you go to the gas station and you slide your credit card in, they had this little gadget that was sitting over the same thing. It looked exactly the same.
It's called a skimmer.
Yeah, skimmer, you got that. They got me. They
Yeah,
did it.
7-Eleven has them a lot.
Yeah,
You have to like, whenever I use my card, I like give it around.
yeah, you gotta make sure it's right,
Use
right?
tap or Apple Pay.
Tap Apple Pay.
Yeah.
So do you know the best thing that you can do to protect yourself against that? I said this last month. Does anybody remember?
Cash,
Do what?
cash.
Yes, but the problem with cash, if you lose the cash, do you get it back? Nope. So what do you use? Yes.
Credit card?
He was there. You were there last month?
Yeah.
That's exactly the answer. Why do you use your credit card? You gotta tell them, you teach the class.
You can dispute the charge.
Because you can dispute the charges. Once you lose the money out of your account, that money's gone. If you're carrying cash and you lost your cash, that money's gone. If you're using a debit card, that's your money, that money's gone. But that credit card company has to prove that was you that made that expense. They cannot prove it, knocked right off your account.
You can do that for debit cards too.
You can do it I can do it with Citibank, right? But a lot of people, Chase Bank, a lot of people are in the wrong bank where they might not be able to do that, Chase Bank. So you gotta make sure you watch out for certain banks out there, all right? Wells Fargo. So, I don't wanna, say any names, especially on camera. We'll delete that, we'll put a censor on that. But that's a valid point. Yeah, definitely use your credit cards for as much as you possibly can because they're insured. Even though your money is insured also, you don't want to go through the process of trying to get your money back. I told y'all last month that I got hit for $2,000 for somebody. Check this out. I like to eat out. Anybody like to eat out? All right. So when you pay, what happens to your card?
They take it from you.
They take it from you. Do you see what they do with that card, Jose? No, you don't. Right? But next thing you know, you got some additional charges you didn't expect. Right? This is why. So somebody got me for $2,000 for Kate Spade purses. Are those good?
I like
Why am I looking at the guys asking these questions? Are those good?
Cakes, babe.
Kate Spade?
They're decent.
They're okay? Are
Yeah.
they like upper, middle, or lower
No,
echelon?
they bought a bunch of purses. If
They
it's
bought like
2,000,
2 G's worth.
yeah.
So how much is that?
Well, the purses can range between like $100 to $300.
Kate Spade.
Yeah.
No,
So-
so I
They
thought
got a
they had
few.
like some good taste or something. I thought it was just for like one purse.
I feel like at Ross and stuff.
Like Ross?
Yeah, you like your cakes.
Okay, yeah.
They
So
got a lot of
my
purses.
point being is, even though I'm educated, even I can get caught, right? Because as far as I was concerned, I just ordered a steak. I'm in a pretty decent establishment. That shouldn't happen here, right? Man, that's where it happens the most. Because you get all these people coming up in there completely comfortable. They think everything is good. This stuff doesn't happen here. Yes, it does. Possibly more. Because they're not paying their employees enough, so they use that opportunity to go ahead and get that money, right? they might be getting yours. So watch out for that, right? So next month, we're gonna be going over grow your wealth. That's what a lot of you have been waiting for, okay? So people have been asking me about the infinite banking concept and how does that work, wills and trusts. So we're gonna be going over all that information. Now, if you are under 30, show of hands of everybody who's under 30. I'm gonna need y'all to pay very close attention to this class, okay? Because you're so young, it's not gonna cost you as much as somebody who's old and crusty as I am, right? You can literally get yourself set up and actually get yourself so set up to where you can retire much sooner than what they say you're supposed to retire at. What is the retirement age right now? Anybody know?
67.
Absolutely wrong. Nope. You know what the retirement age is? I want you to tell me one more time what the retirement age is.
67?
67? Anybody else? You're all wrong. Tony, that's what they said. That's what they said. What is your retirement age? Because if you have the money, you can retire whenever you damn well please. Right? You can wait till you're 65, 67, but they're telling you 65 and 67 because that's when you're supposed to get your Social Security payment. They might not be there. So the whole reason why we're having these classes is so you can retire when you want to. So you'll have the funds available so you can retire when you want to. This is something I need you to understand. What is the average age of a person who expires, passes on, goes home to glory after their retirement? How many years do they usually survive?
It's like 13 years.
About 13 years?
About
I heard
13
it's between 10 and 15, so that's spot on.
Yeah.
So you're 65, so you're telling me you're expecting to die at 82? 67, expecting to die at 82? Is that what you're saying? How about you retire when you want to? Because if you retire when you want to, that means you don't want to work anymore. Because a lot of people, they work that long because that's their lives. And that's why they expire afterwards. But if you retire when you want to, that means you still are young enough, particularly if you retire at 50, 55, you're still young enough to get out there and do something else. You can get another job, get another career, start a new business, do whatever you want, right? But you'll be living and you'll have the means to do so. That's what I'm hoping for a lot of you because I couldn't get that for myself. So I throw as much of this information in my son's head as I possibly can. My son's out there grinding right now, right? So I really appreciate all of you coming out. I hope you get a chance to come out. I think it's May 20 something, May 16th, I think it is. We're going to be going over growing your wealth. I really want y'all to pay attention to that. All your investment questions, that will be answered on that class, right? I'm a little light on ETFs, but by the time you see me again next month, I'm going to be like PhD level at it. So if anybody has any more questions, if you don't, thank you so much. I appreciate you coming out. All right, the new person. What your last one? Yeah. Okay, so I need to do me a favor.
Nice to see you. How are you? Good to see
Oh,
you.
I want that. It's not for me, it's for you. Yeah. I just want you to know that number next time. Okay. You got one? Okay. Thank you, Liv. Did you already stop it? I see people from the church in here.